It was not until the 1990s that climate change was proven to be a real thing. The world looked the other way and took a lot of time to realize the effects of human-induced changes on Earth. The first effort to bring nations together to act on climate change was the Rio Earth Summit of 1992, where the United Nations Framework Convention on Climate Change (UNFCCC) was introduced, and it came into force in 1994. But measures adopted at the Rio Summit proved to be ineffective. This called for a new framework, which was introduced at the Kyoto Summit of 1997, known as the Kyoto Protocol. The Kyoto Protocol was able to bring in more countries to a system that legally bind the parties involved to reduce greenhouse gas emissions. The Kyoto Protocol urged industrialized countries of the world to reduce their greenhouse emissions by 5% from the emission levels of 1990. This puts a cap on how much carbon a country can emit. For saving each ton of CO2 emission than what is permitted by a company, it will receive a Certified Emission Reduction, CER for short. A CER is a certificate issued by the United Nations to member countries for preventing 1 ton of carbon dioxide emissions. It acts as a currency and promotes emission trading in several countries around the world. There are 2 other ways a company can earn CERs. The company can fund the initiative that will bring down greenhouse gas emissions in developing countries that are not under the strict measures of the Kyoto Protocol. This project-based market mechanism created by Kyoto Protocol is called Clean Development Mechanisms or CDM. An example is funding renewable energy production in developing countries. The other way to get more CER credits is following the same in developed countries, which is called joint implementation. To become a carbon-neutral power exchange, IEX has voluntarily cancelled the Certified Emissions Reductions or CERs from clean projects registered under the Clean Development Mechanism or CDM of the United Nations Framework Convention on Climate Change and used market-based tradable instruments. It means the power exchange has bought CERs earned through clean development mechanisms and given up the CERs forever. So no other company or country can ever buy these voluntarily cancelled CERs to have the right to emit more greenhouse gases.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.